Ladies and gentlemen, can we have a huge round of applause for Mr. Anuj Kumar? Can we have a huge round of applause, everybody?
Thank you. Good evening, friends. Thanks very much for finding the time to come and attend what is our third analyst meet in 3 years at this venue today. Very pleased to see a full room here. And I think we had a great start through the Illuminati cultural performance. As has been the usual format, I will cover salient areas, focus areas of what's happened in the year gone by. And then slowly, we will bring over some of the new innovations that we're doing in the marketplace, which are now ready to roll off. One or two have rolled off, the rest are ready to roll off. And I think collectively with all of this, we want to give you a view of what the company has been doing in the recent quarters, what you can expect in the next 1 year, and then more importantly, what can you expect in the next several years as we continue building momentum in our businesses, across businesses, through technology interventions, investments, advancements on various innovations, bringing over talent across all of those fronts. So what I'll do is, I have a short PowerPoint. It'll probably take 15 or 20 minutes for me to cover. I will begin with this, and then we will slowly continue rolling off. Now, if I could have a glass of water here, please. Just see if somebody can get that for me. Are we ready with this? Okay. So I'll commence. Just in terms of the year gone by, and I'll continue partitioning everything into mutual funds, which has been the core franchise, non-mutual funds, which is the emerging area, and spend some time on both of these. As far as MF is concerned, you know that we've continued to strengthen our leadership, and I'll show you how. Leadership is market share, but it is several things beyond AUM size and market share. So we've continued to strengthen market leadership. We've built superior performance, and I'll give you artifacts and evidence of what we mean by superior performance. And as far as profitability and revenue is concerned, you know that we'd made some kind of adjustment. There was a pricing adjustment. Some commercial things happened during the last 1 year, of which we've briefed you in earnings calls and analyst meets earlier. I think the great news is that while we kind of swallowed that pill, it wasn't a very sweet pill, it was a bitter pill, but we swallowed it. It was expedient to swallow it, to move on, and we moved on after 3Q last year. And the great thing again is that we built back the company to peak profitability and peak revenue all within a matter of 9 months. And I'll get to those numbers. Just to kind of take you through each one of these, we've spoken about this in the past. It was an year of unprecedented activity. We took 6 asset management companies live on a platform for the first time ever. When I joined CAMS, we had 16 asset managers built over a period of about 25 years. So we used to take about 1 asset manager live every year. In good years, we may have taken 2, but I've never seen a year when we took 6. And it's quite possible that in the coming year, in the current year, in 2026, these are all calendar year references, we will take another 6 live. We've mentioned these names several times. I don't need to go through it, but these are iconic names. Angel One, which is part of the Angel One group. Unify, which represents one of the largest PMS enterprises in the country. Geo BlackRock, they come with very large ambitions. So those 3, Cbank, which was the first inbound win from Sri Lanka. We still don't have any active hunting mechanism there. So this was an inbound call which came in and we converted it. Taurus Mutual Fund, which was a migration from competition. Choice, which is a listed broking company. Some of the brokers have chosen to go this way and set up their own mutual fund. So it was a matter of pride and I would say immense satisfaction to have taken these 6 live. But if you see the other part, the other part of the screen, there are 4 ones which are won. These are logos which are won, which can go live, which should go live in the first 6 months of this year. You can see the names. There's Cosmia, there's Carnelian, which was a mandate we won just in the last couple of months. ASK, which signed about 5 or 6 months back. AlphaGrep, which is going through the motions of getting the certificate and getting the final inspection done by SEBI. So all of that is happening. So this year, Calendar 26 could be as exciting and as imbued with activity as calendar 25 was, but calendar 25 with 6 CMCs was just a great place to be in. And therefore, what do you have now? You have CAMS as a platform with 24 large, fast-growing AMCs. Some of these are recent wins. A lot of these are entrenched players who have a history of 1, 2, 3 decades, or even more than 3 decades in service. 55 lakh crore of assets. And before coming to this meeting, I was just reading through the report for yesterday. On 3rd of February, we crossed 57 lakh crore. So despite what's happening in the markets, it's counterintuitive that people's belief in metal seems to be growing. I mean, you guys are seeing the same thing that we are seeing. But to see that we grew to the highest ever asset base was very, very gratifying. So 57 lakh crore now, these are December end figures out of the 82 lakh crore. 68% market share, the rest of it you've seen in the past, so I will not go through the same stuff again. What does leadership mean for us? Like I said, in this industry, assets lead to leadership. That asset market share has remained at about 67.5%, 68% for the last 2 or 3 years. But I will just draw your attention to the fact that on the equity assets, this market has become more and more equity heavy in the last 3 years. Some of the indexation benefits on tax on debt mutual funds, that was taken away a couple of years back, and therefore the overnight fixed income debt part is growing slower. The equity part is growing faster. If I dial back 5 years, our equity AUM market share used to be about 60%. You will see a number of 66 and some change, 66.4% in December. This is a jump of a complete 0.7% over last year, December 24 to December 25. It is the most precious part of the franchise, which is fastest growing, where we are taking share consistently. And I just want, although we reiterate these facts every time we meet you guys, but I thought you should see this. I will not go through every one of these numbers. I just want you to see that when the bus is traveling fast, when there is so much momentum, so much happening, and I'll show you all these numbers, transaction count grew 19%. Why did it grow? Because so many new investors are coming in. It is becoming a retailized market progressively. Our SIP grew about 8% year to year, but when you see SIP transactions, systematic transactions, most of this is SIP, some of them may be transfer and withdrawal, but mostly SIP grew 22% year on year. Live investor folios grew, you can see the number 18%. Unique investor count grew short of 15%. These are fantastic markets. You know why? Because I've been in business situations when the entire market was growing only 4 or 5 or 6%. There's only so much you can do. So the great news is that the markets, the tide which is lifting us, has a lot of momentum. And despite doing all of this, despite doing this growth, despite the AUMs going up, the number of investors expanding, transactions expanding, you have seen near zero disruption. What does disruption mean? Disruption means frauds, complaints, mispayments, customer chatter on platforms like X, regulatory breaches, other issues that you see in segments. They happen in many industries. But what I'm very pleased about is that all this growth has happened despite the wheels coming off or despite pressure building up in any part of the franchise, and that's very, very gratifying. Complaints, now we can be dismissive about complaints, saying, look, you'll always have complaining customers. But I think in regulated industries, complaints have to be counted, reported transparently. And one good metric that you see on the screen, when you see on the screen that complaints as a percentage of transacting customers, customers who do not transact, they put their money 10 years back, have been sitting quietly, perhaps are less engaged. They're not talking to us every day. But the ones who are transacting, the complaint ratio is 0.002%. What does that mean? 2%, if I have 100 transactions, 2% is 2 out of 100. 0.2 is 2 out of 1,000. 0.02 is 2 out of 10,000. And 0.002 is 2 out of 1 lakh. That instance of complaints you will not see in any sector. Look at consumer durables, look at banks, look at insurance companies. You guys cover multiple segments. Whichever segment you're focused on, you will find, I have never in my career worked in about 5 or 6 sectors, never seen complaint ratio that low. But I think what is more gratifying is on the right-hand side of the chart, that while we have 68% market share of assets, our complaint market share is only 53%, which means someone else who may have 30 or 32% market share has almost half the complaints coming their way. I need not elaborate upon this. Obviously, this is not a forum where I should, or I'm inclined to rub dirt in anyone else's face, but just from a comparison perspective, we all make comparisons with competitors. There's no one else to make comparisons with. I think that's very gratifying. What you see at the bottom is an annual survey we do of investors. It's a mandatory survey we do every year. 30, 40, 50,000 people participate. And we've always kept the score in the 90s, but it's now gravitating towards the high 90s. People are very satisfied or satisfied with CAMS' services. Where do they get the service? Many formats. You can come to our branches. You can talk to us on the call center. You come to my CAMS. You can go to CAMS online. Wherever you go, that high 90s satisfaction score is, and this is all last year's performance. I think it's very, very gratifying. One other thing that happened in the markets, which I just want to allude to a little, that you saw that there were consultation papers on this asset class called SIF. What was the primary intention? The intention was that a lot of Indian youth, and you can read it going all the way up to now, where the securities trading tax has gone up. So the predilection of government and regulators is to have people come into the markets, but not in a significantly risky way, not lose their shirts. And losing their shirt in day trading, in FNO, sometimes in portfolio management schemes which were unregistered, unlicensed, that was quite a bit. The regulators were trying to create a product class where some of that risk taking could be experienced in a new product. So SIFs have been launched. Again, it's too early for me to say whether we are drawing money from where we wanted to draw money, or where the regulators wanted to draw money. Is this the money coming in from day traders? I don't know yet. It's just 3 or 4 months from the launch. But again, pleased to tell you that year to date, starting October, we've launched 4 SIFs. Collected about 4,000 crore rupees. The estimate is, and this could become like AIFs, or this could become bigger. I don't know where it'll go, but this could become bigger because the initial part is not bad. People have launched new fund offerings which have brought in 500, 700,000 crores. Somebody has done recently more than 1,000 crore. So this opens up a new avenue for CAMS. It's contiguous, it's adjacent. Will we take share from broking? Maybe we will. We will take share from somewhere else. We might. The more speculative bent of mind of some of these investors will create a new market segment and has created a new product class. But I think broadly, very pleased that we are able to stretch the boundaries of the overall offering. This is an interesting chart. I alluded about this, that while we swallowed what was not a very sweet pill, we chose the decision to swallow it quickly, to have no overhang, to have no backdrop of a decision which was half taken. So we didn't want to take half a decision. We took the full decision. We briefed you about this exactly a year back during our earnings call end of January 29th, 30th. We said we will take the entire price cut in one shot. So you saw that both revenue, you see MF revenue there, you see 2 quarters of dip, and we've come back to peak. Similarly, at enterprise EBITDA level, our peak was about 173 crores in 3Q of last year, dipped close to about 150, but we brought it back all the way to 179 this last quarter. And therefore, in about a year, we've scaled back to peak levels, both MF revenue, enterprise revenue, enterprise EBITDA, and I think this is just the beginning. This now becomes the baseline from which further growth has to happen and will happen. Very, very positive in the future. When we get towards the end, Ram will cover detailed financials and show you some very exquisite financial metrics, which we've not been in the habit of showing in these kind of meetings. For the first time, we're exposing you to those. Obviously, some of those are known to you. Some of those may not be noticed as closely. But again, very happy that the overhang has gone away. Obviously, we can't forget the past. It'll remain as a part of the past, but we've scaled back. And I think starting now, we're in the fourth quarter, you will see just consistently progressing results across business classes.